Dell, and I am from HIA Insurance Services. And today I'm the one presenting our webinar today in relation to domestic building insurance services. So to start off, I'll give you guys an introduction of our business. So HIA Insurance Services is a joint venture between the Housing Industry Association, the HIA, and Aon, one of the biggest broking company in the world. So it's a very privileged position that we're in, where we can leverage the industry knowledge of HIA and then the broking capability of Aon, where we provide tailored insurance products to people working in the building industry. So, so if you're a HIA member or a non-HIA member, you can use our service, and we'll speak to you about a wide range of different insurance products associated with the building industry. So here are just some of the services that we provide and the numbers when it comes to our clientele, premiums that we broker, and then how many offices that we have. So obviously HIA Insurance Services has office in major capital cities across Australia. We've also got 39 offices Australia-wide, including Aon's offices and all that. And then we've got 34 regional offices. We specialise in homeowners warranty insurance and also contract works and liability insurance. So these are all the numbers that you can have a look to show our capability in the industry. So when it comes to insurance, we can't avoid talking about the risks. So in the last 5 years, we've identified 10 risks that are most prominent, and we always talk to our clients about these risks in the building industry. Obviously, the first one is economic slowdown or slow recovery. I'm based in Victoria, and I believe a lot of you are in this webinar. So Victoria's always had the toughest lockdown during the COVID pandemic, and that has resulted in an economic slowdown that hasn't seen in the last 3 or 4 decades. The recovery has been slow, but it has been progressing, but obviously that has had a major impact in the building industry. Obviously, secondly, it's failure to attract or retain top talent. Specifically to Victoria, I think the risk comes from the government projects in the last couple of years, where the big build projects have attracted a lot of tradies and a lot of subcontractors to be working on those projects. And in turn, it has come at a cost to the residential building industry, where tradies are hard to come by, good tradies are hard to come by, and that we're seeing a shortage of supply of, generally speaking, subcontractors. And then you've got cyber attack. Obviously, this is one of the hot topics that's often spoken about in news. People are getting scammed. You've got attacks from foreign sovereign sponsor attacks. So these are all the things that, can happen. And then you've got materials. You've got, prices getting increased, going up. Also, you've got cash flow issues, workforce shortage, major project failure, regulatory or legislative changes and property damage, supply chain or distribution failure. So these are all of the issues that we have more often spoken to our client about, but the most prominent ones obviously are the economic slowdown, the failure to attract or retain top talent, the shortage in labour market, and then obviously the cyber attack. So going to the next slide. So these are the most common insurance that we come across. You've got the contract works insurance, where basically it's the builder's insurance that will cover builder for damage that can happen during construction phase. You've got the public liability. Basically, this is a third-party cover that can cover you for any third-party property damage and third-party personal injury. So these are the two common covers builders have. They normally come as one policy. It's often taken out by builder at the same time. So you've got a contract works again to cover you for damage that can happen during construction works, accidental damage, flood, fire, and all that. And then you've got also public liability cover, again to cover you for third party property damage and third party personal injury as a result of your business activity where you are found to be negligent. Work cover insurance, obviously, this is something that you need to take out as a builder, as an employer, for your employees to cover injury as a result of your building activity. And then you've got domestic building insurance, which is the main topic of the webinar today, where it is there to cover the owner when a builder dies, becomes insolvent, disappears, or fail to comply with a court or tribunal order. Okay. So what is the purpose of domestic building insurance? We've just touched on that a little bit before. So domestic building insurance, it's there to help the owner cover any incomplete works or defective works when the builder dies, disappears, becomes insolvent, or fail to comply with a court order. So the purpose of that is to act as a last resort insurance when the builder is no longer there to assist the owner with incomplete works and defective works. Now, the biggest example that we've all come across in the last 3 years will be the collapse of Porter Davis, where the business has gone into liquidation, where it's left hundreds of homes incomplete or with defective works associated with those homes. And that's when you will see domestic building insurance kicked in to help homeowners financially to pay for the completion of their homes or the rectification of any defective works. And which brings us to the second point. It is there to help the homeowner and indirectly or directly, you could say, provide confidence to the market, because the homeowner can feel assured that in the unlikely event that the builder has become insolvent, has died or disappeared or failed to comply with the court order, there's an insurance there in place to assist with them when it comes to completing their home or rectifying any defective works left behind by the builder that's no longer there to assist them. And obviously, that in turn, when you have confidence in the market, that will support the building industry in a way where the owners has confidence. They know that they can engage a builder and be protected. So domestic building insurance is required to be taken out by builders on behalf of the homeowner when they have a contract for domestic building works with a contract value of $16,000 or more. So here are examples of what considered as domestic building works, but basically it covers a wide range of domestic building works, from construction of a home, renovation, alteration, landscaping, paving, or the erection of construction of retaining structure. So you've got the retaining walls, fencing, driveways. So these are all considered as domestic building works under Section 5 of the Domestic Building Contract Act 1995. So again, this insurance is required to be taken out for all building contract by the building practitioner with when the contract value is $16,000 or more. So when you have a contract, whether or not there's a building permit involved, if it's a bathroom renovation, if there's kitchen renovation, or it's concrete works on a driveway, you're fixing the slab, you're fixing the driveway when it comes to concrete, all of these works, whether or not there's a building permit involved, if your contract value for these works is over $16,000 or just $16,000, you are required to take out this insurance on behalf of the homeowner. So under this particular insurance scheme, it covers incomplete works up to 20% of the contract value. So if the contract price is, let's say, $500,000, then the maximum that the policy will cover, it's up to 20% of the contract price, which will be $200,000. Then for non-structural works, non-structural defects, it's cover up to 2 years. For structural works, it's cover up to 6 years from the point of completion. And then for other losses, all of these, it can be considered when the claim is lodged with the VMIA, which is the insurer that we work with when it comes to this scheme. So basically, this warranty insurance, this domestic building insurance, is there for 6 years, not 10 years. People most often confuse the warranty insurance period, indemnity period, with their own legislative statutory period under the Building Act. So there are two different things. With this particular warranty insurance, it is there for 6 years from the point of completion. For structural defects and for non-structural defects, it's 2 years. And then it can only cover, when it comes to incomplete works, up to 20% of the contract price. So there are different things. So structural defects, again, 6 years from completion. Non-structural defects, 2 years from completion. And incomplete works, when the job's not finished, up to 20% of the contract price. So in Victoria, we work with the VMIA, which is the state-owned and operator insurer. So they're part of the Victorian government, and they're the ones that's underwriting the scheme and also the insurer of these particular insurance. So there are 6 distributors in, at the moment there are, believe 4 distributors working with the VMIA, and we are one of them. So when it comes to distributors, we have direct access with the VMIA. We'll deal with the VMIA directly. We have access to their systems. So there are 4 distributors that do that, and we're one of the distributors that will talk to the VMIA directly. You can work with other brokers when it comes to the domestic building insurance. However, other brokers other than the distributors, they do not get involved with the VMI directly. They don't talk to the VMI directly. They don't have direct access to the VMI system. So only the 4 distributors will have access to everything that is created by the VMIA. And we call that normally a distributor mode, where, only the distributors have direct access to the VMI system. So in Victoria, there are 3 different entities that can take our eligibility. So for anyone that can purchase warranty insurance or domestic building insurance, they must have the eligibility first. Now, the eligibility can be given to 3 different entities: sole trader, partnership, where partnership is made up by 2 individuals, and then a company. So these are the 3 most common entities, and 3 pretty much only entities that can obtain eligibility in order to purchase domestic building insurance. Partnership and sole trader, straightforward. With company, it's a slightly complicated, because apart from the directors own the individual license, they also have to obtain a license for the company. So other than different to the partnership or sole trader, where sole trader, you only have to have your own license and that's it. And partnership, only one of the partners have to have a license. Where you are trading as a company, when it comes to eligibility, once you've obtained the eligibility as a company, the sole trader must have the license, but also the company. So you need to have a license as a sole trader, and you also have to have the license as the company. So again, eligibility is attached to the individual ABN, not the individual person. It's to the individual ABN. And you need to have the eligibility in order to take out domestic building insurance. So the process is like this. You apply for the eligibility to the VMIA first, and then your application will be assessed by the VMIA accordingly. Then the VMIA will let you know what will you be given, what limit you will have, and then that's when you can, once you've got your license and everything, that's when you can start applying for the domestic building insurance for any specific project. So who is being assessed when it comes to eligibility? Again, going back to what we've discussed in the last slide, it'll be sole trader, partnership, and company. Partnership and sole trader, they all can only be individuals. Company, it can be a standalone company, or it can be a company as a trustee of a trust. If your preferred way of operating is through a trust, that can be done. And then again, you all have to maintain the eligibility in order to purchase domestic building insurance. So when it comes to the eligibility and the domestic building insurance, the most common confusion is when people are applying for it, we often hear people saying, I have never had a claim. Would I be favored by the VMIA? Is this something that the VMIA take into account? I've never lodged a claim with my insurers for contract works and liability or just for liability insurance. This is the most common confusion that people have. When we're talking about claims, the VMIA actually doesn't often consider how many claims you have under your general insurance, like your contract works and liability insurance. Their main concern is, have you ever been insolvent in the past? Have you ever failed to comply with a court order? If you have, then that's something that we'll look at closely, because that's the claim that will really affect your chance of getting eligibility, not the claims that you've had under car insurance, under home and content insurance, or under a contract works and liability insurance. So most people, they think that they've never had a claim in the past. It is something that's going to be looked at favorably. In some extents, it is, but that is the bare minimum that you actually have to have. Because if you've ever had a claim when it comes to DBI, then it is not something that you want to have on your history, because that's something that the VMI will look at closely and will have an impact on your eligibility application. So there are many, assessments that the VMI complete. So, a lot more than often, we get inquiries from builders saying, what if the owner's not paying? What if there's a dispute with the owner? Whether there's any delays with the job, whether there's any delay with the council. Is this something that can be claimed under domestic building insurance? The answer is no. These are not the things that will be accepted under DBI. Domestic building insurance, again, it is there to only help the owners, homeowners, as a last resort insurance when the builders die, disappear, become insolvent, or fail to comply with a court order. These things are not, are not claimable under DBI. So going back to here. This is talking about, I think this slide's focusing on the eligibility assessment criteria, where it's more talking about what the accountant's doing. Sometimes they're there to help protect the builder's assets and to help minimize the builder's tax obligations. So often when this is being done, it will have a impact on the application, because if the assets are not being seen by the VMIA, it's not under the builder's personal name, then that's something that the VMIA wouldn't look at. Same with the builder's tax applications. Your turnover is not being shown, your profitability is not being shown. These are some of the things that could affect your application. Because when it comes to the eligibility, the VMI is basically completing a financial assessment on your eligibility. And that's something that will be looked at. And if the VMI can see that you're not financially able to undertake, this amount of works, then they will not be giving you that limit after the assessment. Excuse me. So again, going back to the VMI assessment, they look at strong foundations in the business. They look at your equity, they look at your turnover, they look at your profit margins and all of these to determine whether or not you're running a healthy and strong business. They're mainly assessing the business, not so much you as an individual. This is similar to what we had before about the assessment. This is the same. I think this is pretty much the same as well. Okay, so these are the common issues that we see with the application. So first of all, you must have your financial reports or your individual tax returns ready. If you're a sole trader, we normally require you to provide last 2 years tax returns. If you're a company, we need to have your company's financial reports for the last 2 years. We need to make sure that your trading name, it's not noted on the application. We need to know that you have the entity name. We need to know that you've got your ABN and ACN correctly. We need to know that you have the assets and liability statements ready for each director. We need you to make sure that the directors all sign the documents correctly. Or if there's any ATO payment plans, they need to be supplied. We need to know that what is the cash that you have at in your individual bank account, or your business bank account, that's the same. And we need to know what assets you have. So that's pretty much it. So again, domestic building insurance, it's required to be taken out for any domestic building projects with a contract value of $16,000 or more. And you're required to purchase that before the job started on behalf of the homeowner. Also, the domestic building insurance is not something that everybody can be applied. It is something that you need to have an eligibility for. And when it comes to applying for the eligibility, this is something that you need to go through. You need to submit an application, have a financial review done on your business, and then the VMIA will give you the eligibility based on the financial performance of your business. And this is the process. This is the common things that we go through. And again, domestic building insurance, it's not a general insurance that will cover the builder. It is there to cover the owner. It is there to cover the owner for incomplete works, defective works, up to the policy's indemnity period. And obviously the advice, the stuff that we've spoken about, it's all general. If there's any specific individual circumstance that you would like to speak to us about, then you can get in touch with us, and then we can speak to you privately so that we can learn more about your circumstance, your individual circumstance, and we can provide tailored advice to you. that will be the end of the webinar today. Is there any questions? If there's any questions, we're happy for you to put it in the chat, and then we'll answer and we'll respond accordingly. We'll give everybody, 1 to 2 minutes to see if they can, if they will put down any answers, any questions, and then any queries so that we can answer accordingly. All right, if there's no questions, we will call it the end for the seminar. And if there's any questions, you can see the contact details on the phone, and you can get in touch with us, and then we'll go from there. Thank you for your time. Have a great day, everybody. Bye.